Hello everyone, and in this recording we are going to discuss about home insurance. So in the last chapter we discussed the basics of insurance and then we discussed part about auto insurance. In this chapter we are going to talk about home insurance. While the purchase of home insurance policy is not mandatory, so this is a big difference between home insurance and auto insurance. Like we studied in auto insurance, there is a mandatory third party liability that you have to get when you purchase an auto insurance. So not entire part of auto insurance is mandatory, like you don't have to protect your car, but you have to protect someone else getting hit by your car. So that is the third party liability which is mandatory. But in home insurance nothing is mandatory. So it involves insurance coverage for your home if you own the building and the content of your home. Okay, so there are different types of policies. So home insurance is generally bundled into predefined packages. There is a comprehensive home insurance package. Comprehensive means it provides insurance coverage for both the building and its content for all risks except those risks that are specifically excluded in the policy. So this is going to be a trend throughout the insurance course, right? So what do you mean by comprehensive policies? Any kind of comprehensive policy will most of the time cover, right, all the risks that are there except those risks that are specifically excluded from the policy. So this you have to always remember, that comprehensive policies cover, right, majority of risk, right, except exceptions that are specifically mentioned in the policy. It could be a comprehensive auto policy, it could be a comprehensive home insurance policy, it could be any other comprehensive policy. Comprehensive word itself means it's covering all the risk except the exclusions. Okay, then there are basic or named perils. It provides insurance coverage for perils that are specifically named within the insurance policy. So the difference between comprehensive, it covers all risks except the exceptions. Named perils will cover only the risk mentioned in the policy. It will not cover anything else. Now, there could be a broad policy also. It provides all peril insurance coverage for the building and named peril coverage for the contents covered by the policy. So it takes best of both worlds. So all peril means, right, most of the things are covered for the building, for the structure, and named risk are covered for the content, right? For example, the content could be covered against fire, against theft, right? So these are named peril insurance. Okay, now let me adjust this a bit because this came here. So we'll read the no frills and then we'll talk about it. Okay, so what is no frills? No frills is the less common, this is the bare bones type of minimal insurance plan offered by some insurance for properties that do not meet normal undertaking standards. So if you see the price summary, no frills is the cheapest. Then there is basic or named perils. It will only cover the risks that are mentioned in the policy. Then there is broad. Broad means comprehensive policy for the building and name peril for the content. And then there is comprehensive policy that covers most of the things. Okay, the cost is increasing. So the cheapest is the no frills one, followed by the name perils one, followed by the broad policy, followed by the comprehensive policy. Now there is the concept of replacement cost versus actual cash value. So policy owner usually has the opportunity to select the basis upon which reimbursement of the loss is made when purchasing the home insurance policy. The first option you get is the replacement cost. What is replacement cost? The claim settlement amount does not take into consideration any deductions for depreciation, age, wear and tear, or obsolescence. So this is like the depreciation waiver that you get in auto policy. So whatever claim amount is paid, it will not take any depreciation, any wear and tear into consideration. It will provide you the claim settlement amount without any depreciation deduction. The carrier provides reimbursement based on the cost of replacement item. So whatever is the cost of replacement item, they will provide you for that. For example, if you have a replacement policy on your roof and your roof is damaged, so they will pay you to replace your roof, right, with a new one, right? They will not deduct any deduction for how old the roof was, how like damaged the roof already was, etc, etc. They will pay you to get a replacement roof. Most carriers require that the lost or damaged items be repaired or replaced with an item of similar kind and quality. They will check the kind and quality while replacing the roof. Then there is actual cash policy. The insurance carrier will value the lost based on the actual value. It takes into account depreciation, age, wear and tear, and obsolescence as it relates to the insured item that has been lost or damaged. So actual cash value policy, right, it will take depreciation into account. For example, if you have an actual cash value policy on your roof and the roof is 10 years old, then they will pay you a cash amount considering the depreciation of the roof for 10 years. Let's say the cost of replacing a roof is $80,000 and the depreciation on that roof is $40,000. 10 years, $40,000. So they will pay you $40,000, the rest of the amount. So 80,000 the roof value minus 40,000 depreciation amount gives you 40,000 cash value. Cash value will be paid. They will not pay you the entire $80,000 that might be required to replace the roof. Okay. Then claims. The insurer should be contacted as soon as possible when an insured encounters a loss. So whenever there is loss, you need to contact the insurance company as soon as possible. In the further case of like robbery or theft, the police must also be informed. The insurer may use subrogation and sue the third party to recover damages it has paid to insured if the third party was responsible for causing the loss. For example, there is robbery or theft. So whatever is the robbed item, the insurance company is going to first pay you. After that, they might use the subrogation clause, in which case they will sue the thief to recover money from them. Okay, this is the subrogation cost. So first they pay you and then they get the right on your behalf to go after the thief. Then lot of home insurance policies also have this additional living expenses. So they cover additional living expenses. So many policies includes coverage for additional living expenses when an insured peril causes the insured home to be unfit to live in. If a tenant in the insured home must leave because of damage to the insured residence, most home insurance policy will also cover the lost net rental income during the building. Okay, so two things. Additional living expenses have two contexts. First of all, if it is the place where you are living and the place is not usable because let's say there is flooding or fire, then the insurance company will pay you to rent out until the property is repaired. Now, if the insurance is taken for a rental property, then while the rental property is being replaced or repaired from fire or like flood damage, the insurance company is going to pay you the rent that you have lost. So this is the context in which additional living expenses clause works. Uninsurable peril. Home insurance is intended only to protect policy owners from unpredictable events such as sudden and accidental, right, perils. There are number of perils that are uninsurable, such as damage from insects or rodents, right? Rodents coming in due to the flood, that part is not covered. Then home insurance also consists, right, liability coverage. So what is liability coverage? Liability means damage to someone else. Always, whenever you hear the term liability in an insurance, right, it is liability that is damage you're causing to life, health, or right property of someone else. The most home insurance policies includes coverage for personal liability insurance that provides the insured and others within his immediate household with protection for legal liability to others, often referred to as third parties. Example, housekeepers versus employees of home business. So liability coverage applies to people who are coming to your place and they get damaged, but it does not cover employees if you're running business from your home. Employees have to be covered under business liability. They cannot be covered under personal liability because they are not recruited by you, they are recruited by the business. Okay, but a housekeeper, if the housekeeper is coming to your house, the garage door, like the garage floor is slippery, she slips down or he slips down and there is some lawsuit, that liability would be covered under the home insurance liability clause. But if you are running a business and a business person is coming, right, an employee is coming and the employee slips and falls and there is a lawsuit, then the home insurance liability will not apply. Liability insurance under a homeowner's policy does not normally include a deductible and generally covers losses that arise through ownership of such things like boats and sailboats, self-propelled lawn mowers or snow blowers. So whatever property you have kept inside the premises of your house, they are also covered, like boats and sailboats and etc. Then there is excess liability coverage. This extends the liability protection beyond what is covered in the basic homeowners or automobile policy. So it's called as the umbrella policy. So it will cover, right, all the damages that are not covered by home insurance and that are not covered by automobile. Then if you want to insure a cottage, it may be insured under the same policy as the insured's home, or it can be separately. Cottage insurance is generally limiting. It is not very comprehensive. It doesn't cover everything. Then there is tenant insurance too. What is tenant insurance? Tenants are responsible for damage or harm they may cause to any part of the building in which they live, as well as to others who visit or live in their premises. So if you're renting and you cause damage to the property of the landlord, or if you are throwing a party and some guests are coming and there is a damage caused to them, you are liable for that damage, right, if it can be proven that it is intentional and it is due to negligence. Okay, tenants also have personal property that should be insured against damage, theft or similar types of losses, which are available in tenants package or tenants improvement coverage. So you could have personal property like furniture set, television, that you might want to cover, right, from damage. Then there is condo insurance. The condo owners have the title to their own condo unit, and have condo owners insurance policy normally covers the content of the unit, because when you buy a condo there are two levels. There is the condo board, who usually has insurance that covers the structure of your condo, but the content inside the condo are not covered by the condo board insurance. So you need to get a separate insurance to cover the content of your condo unit. Then there is business insurance. An individual who is in business has the need for a variety of business insurance coverage that should be reviewed with a qualified insurance advisor. Business insurance covers liabilities from the business. So someone suing you because of the business you are into. Then there is product liability insurance. There are insurance products available that allow an individual distributing or selling a product to share or transfer the financial risk of potential liability risk. So if you are, let's say, into selling investment products and someone sues you for that, so there is an insurance, product liability insurance, that you can take. So in that case, that insurance will take care of that. There is also professional liability insurance. Usually applies to people like chartered accountants, right, lawyers, because like for example, lawyers, if they make a mistake, they can get a lawsuit against them. So if you make mistakes in the professional capacity, professional liability insurance covers those risks. So professional liability insurance is available to professionals to protect them against suits brought by client or others and under carefully described conditions. Okay, that completes the home insurance topic. In the next recording, we'll start with health insurance.